August 2005. A quiet stretch of the A74 motorway near Kirkconnell, Scotland. A white delivery van pushes steadily north, passing through the empty morning roads of Dumfries and Galloway. The driver keeps the speedometer locked exactly on the legal limit, not a mile above. Nothing about the van looks suspicious. No erratic movement, no speeding, no signs of stress. Yet, Scottish police signal for it to pull over for what they describe as a routine stop. The driver steps out calmly, hands officers his license, answers questions without hesitation. Everything seems ordinary, right up until the moment they ask to check the cargo. When the back doors swing open, the officers find the van packed wall to wall with cardboard boxes, neat stacks, all sealed, labeled, and marked as clothing shipments. But the logos jump out immediately. Calvin Klein underwear, Nike sports items, Prada accessories, Lacoste polos, Disney-branded children's wear. Dozens of globally recognized brands, all in bulk, all neatly packed. If authentic, the load would be worth more than £1 million, but officers with training in counterfeit detection spot the problems instantly. Stitching slightly off, labeling inconsistent, fabric weight not matching the real products. Every single item in the van is fake. The man behind the wheel insists he has no idea, says he's only a courier, claims he's just transporting the load to a wholesaler in Glasgow. Police arrest him anyway. Everything is photographed, catalogued, documented. What those officers don't yet know is that this van is a tiny thread in a massive web. The first crack in a criminal network that would later be revealed as one of the largest tax and counterfeit operations in UK history. And the mastermind isn't anywhere near Scotland. He's 300 miles south, sitting comfortably in an office on Fishergate, Preston. His company? Fastex Limited. His name? Arif Patel, a man the community believes is nothing more than a successful textile businessman. To his neighbors, Patel is the picture of legitimacy. A man who built a thriving sock manufacturing company. Someone who employs family, contributes to the local economy, and enjoys a respectable lifestyle. He lives on Sherwood Green Lane in Fulwood, a leafy, well-regarded part of Preston. Expensive suits, good cars, steady business trips abroad. Everything about him suggests stability, respectability, and hard-earned success. But that's just the surface. Underneath, Patel is constructing a criminal empire valued at more than £150 million, built on counterfeit goods and a sophisticated VAT carousel fraud. Preston, Lancashire, early 2000s. Walk down Fishergate and you'll see Fastex Limited's offices. Clean glass, professional signage, nothing out of place. To any passerby, it looks like a standard textile company. Patel, then 37, describes himself as a simple manufacturer of socks and basic clothing, unglamorous but reliable business. His brothers, Faisal and Munaf Patel, operate related companies. On paper, the family is involved in legitimate import, export, and manufacturing. But by 2004, Patel sees two opportunities that can make him far more money than socks ever could. Both illegal, both extremely lucrative. The first, counterfeit clothing. China and Turkey's counterfeit industries have evolved to a level of near perfection. Manufacturers are producing fake designer goods with almost the same fabrics, same patterns, same cuts, nearly indistinguishable unless you know exactly what to look for. Import these items in bulk. Sell them to wholesalers and market traders. The profits are enormous. The second, carousel VAT fraud. A scheme so profitable that if executed correctly, it can generate tens of millions in refunds from the government based on transactions that never actually occurred. Patel decides he will run both operations simultaneously. One will provide the revenue. The other will explain and clean the money. Together, they will create a criminal empire disguised under the cover of legitimate business. In 2004, Patel begins traveling frequently to Dubai. These aren't holidays. He goes to meet his financial partner, Mohammed Jaffer Ali, 46, a man who understands the mechanics of offshore finance and how the UAE's free zone corporate system can hide enormous amounts of money. Ali becomes Patel's financial architect. Patel sets up shell companies registered in the British Virgin Islands, entities with no real offices, no employees, no factories. Ali uses Dubai's free zone companies and offshore accounts to create a complicated maze where money can enter, disappear, and reappear without clear origin. Funds from the UK move to Dubai under the guise of international payments. From there, the money is laundered through a series of offshore entities and eventually used to buy property, not in Patel's name, but in the names of the shell companies. Properties across Preston, properties in London, commercial buildings on Fishergate, homes in Sherwood Green, investments in Turkey, Morocco, the UAE, and Saudi Arabia. Each asset looks legitimate. Each property is owned by a company, not an individual. The money trail blurs, and Ali is in charge of maintaining the system, constantly adjusting the structure to keep investigators from figuring out where the money is coming from. Meanwhile, Patel starts building the counterfeit side of the operation. He travels to China and Turkey to meet manufacturers who specialize in high-quality fakes. These factories can replicate brand logos with startling accuracy. The only imperfections are microscopic, slightly incorrect embroidery patterns, a label sewn 2 millimeters off, fabric that's just a shade lighter. Patel orders shipping container after shipping container, fake designer socks, t-shirts, underwear, children's pajamas, hats, accessories from at least 35 different global brands. The factories package them cleverly, mixing counterfeit goods with plain, unbranded clothing. Customs officers opening a container see mostly generic stock and often let it pass. And most shipments do pass. Customs inspects only a small fraction of incoming containers. Between 2004 and 2007, Patel imports dozens of shipments, each with counterfeit goods valued at more than £1 million. The distribution network is already waiting. Wholesalers, market stall owners, small retailers, online sellers. People who don't ask questions. People who care about profit, not paperwork. But this side of the business, big as it is still only the surface. The real financial engine of Patel's empire is the carousel fraud. Carousel fraud is complex. It requires layers of companies, fake trading chains, and immaculate paperwork. Patel creates multiple companies that appear independent. Fastex, Moreville Trading, Oakville UK, Fizzle Imports. Different directors, different daughters, different bank accounts. The companies sell goods to one another, but these goods don't actually exist. Transactions exist only on paper. Each sale includes VAT. Then, one company in the chain claims a refund when the goods are supposedly exported out of the UK. If done correctly, the government refunds VAT that was never actually paid. Between 2004 and 2006, Patel's network submits claims for £97 million in VAT refunds. HMRC stops a large portion, £64 million, but £33 million successfully slips through. This requires experts. Patel hires 2 chartered accountants, Anil Hindocha, 69, and Yogesh Patel, 66, respected professionals with decades of experience. Their job: make the fake transactions look real. They build accounting records for every fictional sale, create invoices that look legitimate down to the smallest detail, generate export documents for shipments that never occurred, fabricate customs declarations, bills of lading, transaction ledgers. Their precision is flawless, And that flawless precision becomes the evidence used against them later. Every fake invoice carries their style, their formatting, their professional fingerprints. Between 2004 and 2007, HMRC seizes 39 containers linked to the network, each one packed with counterfeit designer items. Each seizure worth around £1 million in fake goods. Different ports: Liverpool, Southampton, Felixstowe. Different company names. Same pattern every time. Slowly, investigators start connecting the dots. The same companies, the same names, the same Preston addresses, the same shipping patterns. Then comes the van intercepted in Scotland, another connection. Another link tied back to the Patel network. By 2007, investigators realize this isn't just a counterfeiting ring. It's not just VAT fraud. It's a single, massive criminal enterprise. They launch a full-scale investigation, Operation Mimosa. Operation Mimosa becomes one of the most complex financial crime investigations ever undertaken in Lancashire. HMOR strips join forces with Lancashire Police, pooling intelligence, forensic accountants, financial analysts, and digital investigators. The goal is simple: map every company, every shipment, every invoice, every overseas transaction, and trace the criminal network operating beneath Patel's polished business empire. Investigators begin by examining the seized containers. They notice familiar company names: Fastex, Moreville Trading, Oakville UK, Faisal Imports. On paper, these firms appear unrelated. Different directors, different registered offices. But the addresses all tie back to Preston. The contact numbers are repeated. The bank accounts show overlapping activity. Slowly, a pattern reveals itself. The companies aren't separate at all. They're one network controlled by the Patel family. The seized containers also expose the scale. Counterfeit Calvin Klein, fake Armani, knockoff Nike, imitation Lacoste, Disney-branded pajamas that never came from Disney. Representatives from more than 35 global brands confirm the items are counterfeit. Every seized shipment adds to the evidence. Invoices with spelling errors, incorrect product codes, mismatched shipping descriptions. The fraud is vast, and the container seizures are only one part of it. Meanwhile, forensic analysts dig into the VAT claims. Thousands of documents, digital ledgers, transaction chains that loop between the same companies repeatedly, always ending with a supposed export. Some of these exports go to genuine buyers in Europe. Others go to clients that don't exist. Many exports never happened at all. Investigators discover that some of the supposed buyers overseas have no offices, no staff, not even websites. They're front companies created solely to support the paper trail. As the investigation expands, 26 individuals are identified as participants of the network. Not only the Patels themselves, but also drivers, warehouse staff, bookkeepers, money launderers, and overseas facilitators. Some know exactly what they're doing. Others think they're simply working for a legitimate textile business. By 2011, investigators believe they have enough evidence to begin arrests. But the timing is delicate. If Patel suspects he's under investigation, he'll flee. And that's exactly what happens. July 2011. As pressure builds, Arif Patel boards a flight to Dubai, supposedly for a normal business meeting with his partner, Mohammed Jaffer Ali. Nothing unusual, at least on the surface. Patel is known for frequent international travel. But this time he doesn't come back. Dubai becomes his refuge, a place where wealthy fugitives can vanish into skyscraper apartments and luxury gated communities. The UK issues a warrant. Interpol circulates alerts. Extradition requests are filed through diplomatic channels. But the UAE's limited extradition cooperation means the requests go unanswered. Patel's timing is perfect. From Dubai, he watches Operation Mimosa unfold, watches as his network collapses, watches as the people who worked for him go to trial. Between 2011 and 2014, 5 major trials take place. Investigators break the case into segments: lower-level defendants first, drivers who transported counterfeit stock, warehouse workers who unloaded containers, retail distributors. All of them are prosecuted with detailed evidence: seized goods, recorded phone calls, financial records, shipping documents. Each conviction strengthens the case against the core conspirators. One by one, members of the network fall. Some admit guilt early. Others deny involvement but are found guilty regardless. A few provide information in exchange for reduced sentences. By the end of the trials, 24 members of the operation have been convicted. The harshest sentences target the 2 professional enablers. The men who made the fraud appear legitimate. Anil Hindocha, age 69, convicted of false accounting, conspiracy to cheat the public revenue, and money laundering. Sentence: 12 years and 10 months. Yogesh Patel, age 66, convicted of conspiracy to cheat the revenue and money laundering. Sentence: 5 years and 7 months. While trials progress in the UK, Patel and Ali live freely in Dubai. Patel owns multiple properties there, luxury apartments purchased through offshore companies. Ali continues managing the financial maze, though the network's income stream has collapsed. The 2 men follow the UK proceedings from afar. They likely believe that distance protects them, that the UK can convict their associates, freeze assets, seize counterfeit shipments, but without physical custody of the masterminds, true justice cannot be enforced. But the UK legal system has a tool they didn't account for: trial in absence. April 2023. Chester Crown Court begins the long-awaited trial of Arif Patel, even though he remains in Dubai. Under UK law, if a defendant deliberately absconds to avoid justice, the court can proceed without them. The courtroom hears years of evidence: documents from seized containers, testimony from former employees, accounting records, international money trails, property purchases linked to shell companies. Meanwhile, one of the key co-defendants, Mohammed Jaffer Ali, attends the trial initially. He sits in court for most of the hearings, but on March 27, 2023, he fails to appear. A warrant is issued. He has also fled to Dubai, likely believing he can avoid prison the same way Patel has avoided the UK's grasp for 12 years. The court continues anyway. After weighing all the evidence, millions in counterfeit goods, £33 million in VAT fraud, offshore laundering, the judge delivers the verdicts. Arif Patel, 20 years in prison. Mohammed Jaffer Ali, 14 years in prison. Both are convicted in absence, but the criminal sentences are only the beginning. Under the Proceeds of Crime Act, authorities are allowed to seize assets linked to criminal conduct. For Patel, this is devastating. The CPS, HMRC, and Lancashire Police begin 2 years of intense financial investigation. They track every property, every offshore account, every Dubai asset, every land purchase in Turkey or Morocco. They identify over £90 million in restrained assets. Everything is examined. Every asset must be justified. Patel's legitimate sock business could never generate that level of wealth. The numbers don't match. The financial evidence is overwhelming. From a Scottish roadside stop in 2005, a single van filled with counterfeit designer goods, investigators eventually uncover a sprawling criminal organization. What began as a seemingly routine van stop exposed one of the most elaborate fraud schemes ever seen in the UK. And while Arif Patel and Mohammed Jaffer Ali still reside in Dubai, their convictions stand, their assets are frozen, and their criminal empire exists now only in case files, seized documents, and courtroom records. If you want more real investigations, deep dive crime stories, and untold cases just like this one, make sure you subscribe to Truth Unraveled. This story ends here, but the truth never does.